You are listening to the Cresco WealthCast, and I'm your host, Dimitri Korolis. I'm an advisor with Cresco Wealth Management, a division of Wellington Altus Private Wealth. The purpose of this WealthCast is really to bring those down-to-earth conversations that we're having not only with ourselves internally, but also with clients. Just want to bring you authentic, real coffee talk convos that we can all appreciate and understand. You can follow the podcast on Podbean, www.cresco.podbean.com, as well as my Instagram page on the Instagram stories and highlights, which is at The Finance Greek.
Check, 1, 2, check.
Check, 1, 2, check. That's what they do, right? That's the...
Check, 1, 2.
I like that. Levels look good. All right. I am here again with Peter Kollias, Cresco Wealth Management. Thanks for listening to the Cresco WealthCast. So in our last episode together, we did, if I recall, it was sequence of returns. And then we left it off.
That's right.
Talking about diversification, wanting to do a podcast. You're up, Pete. Let's go. No,
Wow, just like that. We're jumping
just
in,
like that.
just jumping into
Let's
the game.
Let's be nice about it.
No warming up. Just get off the bench and jump in there. Right?
You know what? That's not our style. I forgive me. We got our coffees here. We got this beautiful room that Carissa is just brought together.
It's great. It's comfortable. It allows us to have conversation, allows us to have flow for just not you and I, but whoever wants to come to you and use it. So, you're right. We're talking about diversification. Last time we had a conversation and we said, okay, you know what, as people head into retirement or just in general and looking to, manage their portfolio, what can we look at? And we talked about sequence of returns, there's diversification, there's finding yield and income, and then there's tax minimization. And so today, the conversation is about diversification. And it's something you hear over and over and over again, with diversification. But has anyone ever actually put some meat behind that? What are we talking about when we say diversification?
Yeah, it is a broad stroke term, isn't it?
it?
You could sit there and say, well, I'm diversified.
It's a catch term, right? It's a catch term. Let's just talk about diversification. Are you diversified, right? But what does that mean? You see it on every supplement out there. Any type of brochure is talking about diversification, and it's great, and we can use it in our everyday vernacular. But what does it actually mean? Like, how do you implement it? What are we talking about here? So I think that's maybe we have some conversation about that today.
Yeah, I like that because it's easy to use the term. It's loose. Does it mean you're just diversified geographically? Are you diversified from an asset allocation standpoint? Do the people that are... let's just throw this out here, Pete. The people that say they're diversified, do they actually know that they are? Or even other advisors that, or people in the industry that claim, are they correct in that claim?
Right, exactly. Like in what context are we talking about when it comes to diversification? And so through our experience, as you know, when we've got the opportunity and fortune to see a lot of portfolios, many portfolios. Mm-hmm. And so the whole point, first of all, is let's talk about what is the reason we want to be diversified.
Perfect start.
Right? Okay. So why does it keep on coming up? What is the reason we want to diversify? And really it comes down to risk management, right? There's this great term saying, I can't remember in the years and years that we've had experience here, where concentration creates wealth, diversification protects that wealth, right? And so if you remember back in the days in the early 2000s, Calgary was a very entrepreneurial, it still is a very much entrepreneurial city, but back then you would have people remortgaging their houses, going all in within an oil and gas play, and they start off with $300,000, and then all of a sudden they'd walk away with close to anywhere to $5 to $7 million. They take this concentrated risk, and now all of a sudden they've got this $5 million. Now you've got a choice at this point in time, and you say, okay, well, do I parlay that into another concentrated risk? Do I take that all and put it back to the oil and gas play? And how many times have we seen that happen where all of a sudden that $5 million now goes down to $150,000, unfortunately? Yeah. Or do you say, okay, I'm going to carve out a big chunk of this, and then I'm going to be diversified, which effectively means that I'm not going to be all within the oil and gas sector. I'm going to put it through these different asset classes, and you've gone ahead and preserved your wealth. So that's really what diversification is about, is say, how do we help preserve our wealth, and how do we minimize our risk?
And the point to that, too, one of the many, that's very well said, Pete, but one of the many points to that is not everything goes up and down and flat at the exact same time.
Right.
And there's many different variables, and whether that is from a sector, as you said, we use oil and gas and energy. That is just, we're in Alberta. It's the example ahead of us, and probably the biggest examples that we see in terms of concentration risk. Let's peel that back, because concentration risk doesn't necessarily have to be the portfolio. If you're working in energy and you have energy company shares, your salary is based on energy, the home that you live in is based on a sector-specific economy, that right in itself is a concentration concentration risk and lack of diversification.
And that's exactly where you want to take a look at the whole big picture, right? Yeah. And we can even carve that out, and we'll try this and see how it works, but you can carve that out and take it to the farming sector, right? The farmers out there, when they're growing crops, they're not just going to have one specific crop. They're going to look at wheat, they're going to look at barley, they're going to look at all these different types of crops, because they're going to diversify across the chain as to because they don't know what the weather is going to bring. They don't know what's going to happen. And so when we talk about diversification, it's all about risk management. A lot of times we come across and people say, yeah, no, I'm diversified. And then you open up and you take a look at the portfolio, and what do they have in there? They've got Canadian banks, and they've got Canadian oil and gas, and they've got Canadian utilities. So really, are they diversified? When you got 20 different names within one sector, are you diversified? That's the question. And a lot of times that's where we find the downfall. Right, and if you've seen that heat map before, looking at diversified, you look at these different asset classes. U.S. large cap was at the top one year, then it's at the very bottom, and then you've got Canadian at the top, and you've got bonds and fixed income. It's always moving, and the reality is if anyone tells you they can tell you 100% they know what the next winner is going to be, they don't know. Right,
they don't know,
because we look at it. Our Cresco investment committee, we have the opportunity to look at all this independent research, and throughout December, a lot of conversation was between these big investment houses. I won't name names, but they're saying, well, I probably wouldn't want to be touching large cap technology at this point in time, and look what large cap technology has done year to date, right?
That's a great point. And the other thing to add to that too, Pete, is when you look at the landscape has changed dramatically, and so when we have $1 of investable capital, and to your point about Canadian banks, Canadian economy, and so on, let's say we want to be in financials. Well, it's a breath of fresh air to understand that if we have $1 that we want to add to the financial sector, where's the best place to do that? The most efficient with the least amount of risk and the path of least resistance. And once you're able to open that door, you don't have to be confined to just playing in your space. We always argue, if someone in Switzerland, do they look at the Canadian banks and say, listen, this is a must. They may, but they have a different perspective because they don't have that home bias.
Well, that's right. It comes back to the biases as well when it comes to diversification. I love that comment. Sweden, for instance, makes up 1.5–2% of the global economy. So does Canada, 1 or 2% of the global economy, maybe a little bit more depending on the year where it falls. But you don't see people in Sweden going ahead and putting 30% of their portfolio into Canada, right?
That's right.
And so what we're talking about here, really, reason why, risk management, and how. It really comes down to something known as asset allocation. Diversification really is asset allocation. Research after research has shown time and time again, empirical evidence, that asset allocation is really what drives the risk-adjusted returns for your portfolio over the long term, right? And so what is asset allocation? How much money you're going to have in cash liquid type investments, how much you're going to have in lending type of products, whether it's fixed income, how much investments are you going to have within the equity space, and then how much do you have then within the alternative space. And being allocated appropriately to your risk profile, that's being properly diversified. And then time and time again, which we always talk about here at Cresco, is make sure you've got a defined process and a strategy that's disciplined, yes, that you're implementing and you're following, and just sticking to that game plan over and over and over again. Of course, with tweaks in between there, but that's really how you get diversified. And then you break layers down from there and you say, okay, where do we go from a geographic standpoint? Where do we go from a sector standpoint? And I'm having that focus. So don't have to overcomplicate it, but it's a very, very important piece. It's very important to understand what diversification is, why you have it, and what you need to do. And I think it often, like you said, it's just one of those words that gets tossed around. But who actually put some thought into say, what is it? And am I actually looking at this? I might have 20 different names, but they're all within one sector. Am I really diversified?
Yeah, then it just becomes, as we say, an accumulation of assets rather than a truly defined investment strategy or thesis.
Beautiful.
And,
Yes.
And the to piggyback off of your excellent points, Pete, is the fact that I like what you said about the tailored and uniqueness approach, and I want to bring that on to say we don't need to diversify from an asset allocation standpoint based on how old are you and that should be your fixed income allotment, or this is the general industry standard of X percent versus X percent. Risk tolerance, timelines, needs, income, liquidity, all of these different profiles, and actually sitting down and listening to what people have to say.
Exactly. Part of the discovery, right?
Yeah.
The process, the discovery. Creating that financial plan, understanding what you need to do with that financial plan, and then having that portfolio to match and be in alignment with that financial plan. Everything that you just said there, absolutely agree 100%.
No, Pete, thanks for your time again. And again, we're going to run a series of these as they come on. Please don't hesitate to do a couple things. Number one, if you have a topic, listeners out there, that you want to let us know about or have us have a discussion around, I'd be more than happy to do it. And I'd also be remiss to say that on the topic of diversification, we didn't go very detailed into our approach. I mean, we have portrayed that we do use what's considered a top-down strategy and looking at it from that standpoint. But if you ever want to have a conversation, we're here, Peter, myself, the rest of the team, we're here. Take a look at what you're doing if you want us to have our inputs, identify the diversification that you have or lack thereof, or even just having a conversation a little more detailed about our exact approach. We're more than happy to entertain those conversations. Thank you very much. And of course, as a reminder, we are now on Spotify. This thing is huge.
We've graduated.
We've graduated.
We're moving up.
We're moving up
the podcast ladder. Watch out, Rogan, right?
Watch out, Rogan. We're coming. We're coming.